Very important day on the economic front, mining and manufacturing data, Nicky. Let's start off with that manufacturing number. Surprising all economists. Why was consensus so low?
I think consensus was low because they expected more or less the same than we saw in April. You know, a lot of people look at the PMI as a sort of a gauge of what is likely to happen in actual manufacturing production. And if you look at that over from April to May, it was pretty much unchanged. So they expected a similar type of growth rate, around 1%, 1.2% thereabouts. And instead what we saw was quite a significant improvement. However, I don't think this particular number is very revealing about what lies ahead. And I think that is clear from just looking at general economic indicators across the globe, the deterioration in the world economy, and the fact that we've actually seen that come through in the PMI for June, which was a drop below 50%, which is signaling, the sudden reversal from slow growth into what appears to be more recessionary-like conditions.
And if you had to look at the quarterly momentum on a quarter-on-quarter basis for the quarter two, or the quarter-on-quarter basis up to the end of May, 0.9% drop. So we're seeing that coming through there. Are you concerned that we're going to start seeing serious drop-offs in manufacturing? We're going to see manufacturing moving back into recessionary mode, or just a slowing down in growth?
Well, we at the moment haven't adjusted our forecast. We've got a very slow growth rate for this year, minimal stuff. But that means somewhere along the line you do have a quarter or two in which you actually have contraction, and I don't think that's unlikely. And I think you have to expect that. And certainly now, I mean, Europe is literally 28% of manufacturing exports. So it's going to have an effect. And we know that Europe has weakened dramatically. Even though, you keep hearing these historic statements from the European Union in terms of moves to fiscal union and moves towards a banking union, and it brings temporarily calm to the financial markets, the underlying real economy in Europe has a huge adjustment to make, and it's going to take pain, and confidence is fading. And we do know that bank loans extended to basically the private sector in Europe is falling. So that will, exaggerate the contraction even further, worsen it even further. So we will feel the effect, and I think, yes, we can expect certainly a few quarters or two in which you actually see a contraction in manufacturing production.
Okay, so basically, how is this going to impact the GDP forecast that you might have on the table for quarter two? Are you re-looking any of those, or do you think that this number was just a temporary blip?
Yes.
And you're going to keep your forecast on the table?
No, well, I think we have adjusted our forecast. We've spread out, we've prepared for a much weaker second quarter and a weaker third quarter, and we've got a marginal improvement coming through in the final quarter of the year. Overall, we were anticipating growth of 2.7% in GDP. We've now revised that down to 2.5%.
Yeah, so another economist that we're having on the desk here saying they're revising down. It's just the trend that we're seeing across the board.
Yes.
All estimates being revised downwards. That's concerning. What does that mean about MPC decisions?
Well, it is decision time to some extent. There is no doubt from their perspective that they will be focused predominantly on what's happening in the real economy, which is not an attractive picture, no matter which angle you're looking at it from. You've got not only a situation where exports now seem to be under more strain. It's always been the drag on the economy since this recovery started in the second half of 2009, but it is now that drag is now intensified, the pain is now intensified. So that's clear. But at the same time, you have that one last pillar of growth, which has been domestic spending, also losing momentum. So overall, the local economy appears to be very, very fragile and in a slightly dangerous sort of space at the moment. I believe that the Monetary Policy Committee will focus on that. Inflation, on the other hand, mainly because of the economic weakness, the fall in global oil prices and other commodity prices.
What about food inflation, though? Because we were talking about that earlier, and we had the US Department of Agriculture coming out with their forecast for inflation on the food side rising quite significantly.
Well, food has always honestly remained elevated, and inflation is the rate of change. So you'll have to see food prices globally really explode for your rate of change to accelerate.
Yeah.
So even though food prices remain elevated, and we've seen wheat prices rise because of fears about weather conditions in the US, the rate of increase has to accelerate from where it is. And globally, it's always remained fairly high. So yes, it is a worry, but I don't think it's something that's going to alter the picture dramatically at this point. Yeah, so inflation for us is easing, so consequently the scope is there to cut rates, especially since other emerging markets
Yeah, when
have
you see
eased.
Brazil doing that, South
Yes.
Korea surprising the market with their rate cut, first time in 3 years. I can't let you go without talking about the mining numbers coming
Yes,
out.
of
Gold
course.
output falling back 2.9% year on year. Overall, mining output up by 0.8% on a year on year basis. How's the mining sector doing right now?
It's weak. I mean, that's the only way you can describe it. I mean, we had big distortions in the first half to their performance as a result of the protracted strike we saw in the platinum mining industry. But the reality is, no matter how you look at these numbers, given that very sharp fall, you would have expected in a normal business cycle, you would have expected a much stronger recovery coming through as we entered the second quarter. It's not there. You know, you have areas that are looking a little bit better, gold production up and so forth, coal production out, and also up in iron ore production up. But really there's nothing there that suggests that this is going to be a continued trend, and overall the picture remains weak.
Thank you so much for joining us today. Not delivering great news, but there we go. There we have it. Those are the mining and manufacturing numbers that we saw coming through for the day. Nicky Weimar, senior economist at Nedbank.